Aloha, everyone. Joshua Hayes at BigWaveTrading.com. Pretty ugly session on Monday. Make no qualms about it. The market has suffered quite a severe sell-off. You can see that the S&P 500. Hold on, let me resize this a little bit here in this window. Sorry, everyone. The S&P 500, you can see, fell about 1.40%. You can see now we have 3 levels of support and 1, 2, 3 levels of resistance. So right now, range-bound market, volume picked up slightly on the NASDAQ. It was actually lower on the New York Stock Exchange. Picked up on the NASDAQ. That's hilarious. Didn't pick up on the NASDAQ. It was just above average volume. But the bottom line is still an overall range-bound market with the NASDAQ 100 coming back into that overall trading range. The best news from the session is that the Russell 2000 performed the best. That's what you want to see. It was only down 0.96%, and it held its 50-day moving average. Now, everything being said, it was a very ugly session. I want to remind you that intraday, whenever I have cash available, I like to trade SPY options, puts and calls at the money at least a week to a month out. Those SPY puts today that I decided to watch, the 273s, the March 26 expiration 7 days from now, those moved intraday 300% from the open to the S&P 500's most ultimate low intraday. So there's still a lot of movement in these options right now in this trading range. So if you're having a tough time stock-wise end of day, don't forget that intraday opportunities abound, and let's not forget contract winners, they can still move. And FEC moved over 100% intraday, so there's still action intraday, but all this makes me think that the market still has some upside potential in it. I had a ton of long signals this weekend, and I told you this was either super bullish or a major fake out. Now, so far, it isn't a major fake out. I only had 3 sell stops trigger. Half of my CMC, half of my sale, and 1/4 of my USAT. So overall, it was really good. Now, I probably should have had half of BBY, but since I couldn't get a full position, my first stop was at 67.58 instead of this low right here. I gave it some room to breathe, so I wasn't knocked out of BBY. But the mere fact that only half of sale, half of, man, my mind is just going absolutely blank, CMC, and 1/4 of USAT is a sign, I would think, that the market overall is pretty healthy. On top of that, boom, here we go again. I have, despite the market and the S&P 500 being down 1.5% basically, and the NASDAQ 100 falling over 2%, somehow, not only did the vast majority of the long signals that I took this weekend, quote, work, i.e. by not hitting their sell stops, I have 8 new long signals this evening. Once again, I'm basically maxed out. I had quite a few stops triggered today, quite a few, but they're all partial. Most of them were for partial profit stops. The others that triggered that were not for partial profits were for tiny losses or very small losses. I didn't lose more than a couple $100 on any trade. And when you're working with a larger account size, that's damn good. So I have no issues with it. But going into Tuesday, I only have about $30,000. And with the 8 new long signals in the 1 ad, I'm going to split this all up evenly. I have 2 new speculative long position ad signals. They'll also get about $3,000 each. So basically it's like 10 total longs, going to put $3,000 each. That's 1.5% of my account capital in each name. I'm putting no more in anyone. I'm putting no less in anyone. Why? There isn't any that clearly stand out as a great selection here. Now listen, you have to decide which one you like. If you have a smaller account capital, if you're doing my recommended 10 positions, 10% of your account capital, 20 positions, 5% of your account capital in a choppy market like right now, and you're obeying only that first stop, you have to decide which ones here you want to take. I cannot tell you which ones are going to work and which ones are going not, because I don't care what anyone says. Based on the universal laws of physics, it is impossible to predict the future. You only have guidelines. So with that being said, let's go. SPAR was the first long signal. This is a CanSlim quality stock and a perfect speculator quality stock. I'm getting long at 1750. My first cut loss, I believe, is right here, 1635. My final cut loss is going to be right there, 1505. But SPAR, CanSlim, Perfect Speculator. Problem, it's extended slightly from its 20-day moving average, so it's not a safe trade. Chef, same situation. CanSlim, Perfect Speculator, slightly extended by 1 cent, actually, from its 20-day moving average. But I'm going to get long Chef, 23.90. First cut loss, 22.80. Then 22.05 for me will be my second one, and my third and final one will be 20.35. I don't recommend anybody giving it that much room to work, but once again, this is supposed to be actually, it is going to just be a 1.5% position, so it's not too huge. And since there's not a whole lot of capital at risk to the first cut loss level, I can keep some 2 wider stops. But you might not do that. So once again, you might use the last green bop date, or you might use that first cut loss level, or these recent lows. It's up to you. I'm giving you the best setups and the best signals from Monday session that I'm taking. I'm telling you what I'm doing, but I don't know you. I don't know your risk tolerance. I don't know your account size, and I don't know how much you're paying for commissions. Don't forget, the 10 long signals that I'm taking, well, 11 overall, is going to cost me $11. Most people, including me at E-Trade, when I do my SPY option trades, it's going to be about $5 per trade. I got to pay $5 every time I trade. That's 1 in, 1 out, $10. So the 10 long signals I'm taking, that's 1 in, 1 out, or 2 in. And then all of my long signals, if they all fail, it'll be about a $30 loss. That'll be like taking 6 trades, 3 in, 3 out at most brokers. So remember, with Interactive Brokers, I can do this. Let's not forget, $3,000 is going into each of these positions, and I'm only paying $1 commission. Makes sense to me, might not make sense for you. You've got to figure out what you like and what you don't like. The next new long signal is FSLR. Same thing as SPAR and Chef. CanSlim, Perfect Speculator, extended from the 20-day moving average. So with it being extended from the 20-day moving average, you're going to be a little careful here, but it's also extended from the 10-day moving average. So if I put 3,000 in, if it comes to like an odd lot amount, I'm going to go below 3,000 on this one. So then I can put more money into better setups that overall have a better looking chart pattern. Now, it's a good looking chart pattern. It's a high quality stock, but where's all my green bop? And that's what I mean. I want to focus more on the green bop names. Now, getting CHGG. CHGG is a stock I should still be long, but I don't know. I think the entries were back here, and this course knocked me all the way out. But, man, if I would have, I can't fault myself. I did everything right. But CHGG giving a pretty good long signal off its 20-day moving average on above average volume with bop moving slightly higher. Want to get long CHGG. 2163. I'll be using 4 stops. 2077, 1941, 1849, 1729. Remember, the same thing applies. The first stop level goes. If it loses green bop, it does it on heavier volume. Moving up half to all of my stops. I'm not sure how much or when. It's a dynamic situation, fluid. Make a decision on the next day. Like I said, if you ever have any questions about where your stop should be, if a stock acts funny and you're not sure how to move the stops around because you haven't studied my top current holdings and or watched enough of these video lessons, just ask me. I'll let you know. But CHGG, Perfect Speculator, also CanSlim quality. So CHGG, FSLR, SPAR, and Chef are all CanSlim Perfect Speculator quality, but they're all a little extended. CHGG is extended from its 250-day moving average, so none are perfect. The remaining long signals is Form from the CanSlim scan. It was confirmed in my Max Green Bop for 5 days scan. When I get long, 1505. First cut loss level, 1440. Second cut loss level, gap fill, 1370. And then after that, it's IPO time. I consider IPOs high quality long signals. We got Kuro as a new one. ILPT as a new one, BY as an ad signal, and SBT as a basically, I got to get back in it because I didn't get it the first time when I wanted to get long because it missed my limit. My limit was the close, gapped up, did not fill my limit. The very next day, it lost its green bop catalyst, got rid of the order because there were other long positions already maxed out, moving the capital better setups. SBT then failed, triggering a full sell signal 3 sessions ago. Well, now it's basically a buyback reversal. Beautiful candle over candle, hammer candle with Max Green Bop. So SBT getting long 1364, 1272, 1212. Kuro getting long, 1733. First cut loss level, 1637, 1558. This is also a CanSlim quality stock. ILPT is not CanSlim quality, but it's a higher price. REIT, very strong, even as it's pulled back here. Look at all the wicks, the tails. Look at all the open body price bars, the hollow bodies. Very bullish. Candle over candle. Heavier volume, not heavier volume, but at least it's heavier than the lowest of the low volumes here in the pullback. And BOP is basically slightly higher in the session before. It's hard to tell here, but trust me, it's slightly higher, so it's good to go. And then the final long signal, BY, beautiful ad signal, heavier volume. It held on to its max green BOP from the signal this weekend, closing at the high of the day after a bullish intraday reversal, getting long at 23.16, adding to my long at 23.16. First cut loss level, I got it even back here. I wrote 22.73, but I personally am going to be using probably this level right there, 22.29, like I already am, and then the final cut loss level, 21.34. But tons of long positions. Once again, I have a tough time thinking that this market wants to sell off too much more based on all these long signals. I'm telling you, a down market producing these signals is one thing, but a market that was basically down 1.5% in the S&P 500 and 2% in the NASDAQ, but yet I have all of these kind of looking charts, it's kind of hard to be too bearish here, especially when the put-call ratio has held above 0.80 the entire time since the end of January in the overall market. So this entire basing pattern sideways, the put-call ratio has been elevated, and today it jumped up to above 1 again at 1.06. We could easily see more downside in the short term, but overall, I only had SAIL do half, CMC do half, and USET do a quarter. If all of the new long positions would have failed, I would be more worried here, but they didn't. So for now, status quo remains, small measured position, tight stops until the market completely rolls over and or breaks out to new highs, where then we can push it into new long positions again. But it won't matter because I'm basically maxed out. All right, everyone. I'll see you in the chat room Tuesday morning. Aloha.